What is up, Trade Pros? It's Victoria from Trade Pro Academy. I hope everyone is doing well today. And we got another YouTube video that centers around order flow and the depth of market. And in today's video, what I'm going to be showing you guys is how to spot market absorption, which turns into massive market reversals. So we're going to be breaking down the principles of absorption. I'm going to show you an example and exactly how to read it on the DOM. This is a huge tool that a lot of DOM traders and order flow traders use in the futures market to develop a strategy for large market reversals. Now, there are a few caveats to that the strategy that I'm going to go through naturally with you guys. And with that being said, if you guys are excited to learn more about order flow and the depth of market, please hit that like button, hit that subscribe button, and we're going to see you after this intro. Now, don't forget, drop a comment down below. What kind of order flow trader are you? Do you like breakouts? Do you like inflection points? What do you like to look at for on order flow, right? Maybe it's something that we don't. Maybe it's something we can learn from. So drop a comment down below and let us know. To add to that, hope to see you all in the community.tradeproacademy.com, where we do lives on occasion where I talk about the markets, trade the markets with you guys, and I really hope to see you there. And check out our order flow trading course. Let's jump right into this and get right down to it. Is absorption first and foremost. Absorption is when the market is trading at a key level, whether it's a high or a low, and there's continuous contracts flooding into the limit side and going in at market without actually moving the market. So what exactly does that mean, right? If we take absorption at a low, for example, what happens on the DOM in absorption on the low is you have an area here, right? This is the bid side where traders, if you put limits, right, you're going to enter the market for longs. Now, what happens on the bid side here is they get represented as market sell orders when you look at a footprint, when you look at order flow. These market sell orders are, in fact, because you are taking offers off the market. So now these become market sell, these become market buy, right? This is just the basics of how to read the DOM and order flow. So remember, the red side here is market sell, the blue side here is market buy, and these are going to be limit orders to get into the market on the long side. So what happens typically on absorption? Let's take a look at what might happen at a low on absorption. At a low on absorption, we'll take any level, right? Let's take like the 54, for example. What happens at the low on absorption? You'll see multiple large bids that are resting, right? Maybe you have 350 that are resting bids. When price actually trades through these, right, they go in at market. They go in at market and they appear here on the red column. Now, they're going to appear as 350 on the red column. Now, these are going to be market sell orders. So the expectation of a market sell order is to see price gradually drop and see more sellers come into the market, right? That's the whole point of this. Now, absorption is the case where these guys get filled at market. These are going to be market sellers. However, market doesn't necessarily go anywhere, right? Market stays fairly flat. Now, at the same level 54, these guys get filled. What happens is they add another 400, and these 400 get filled and added to this number, right? So now you have 750 here. This is what absorption looks like. The continuous re-add of limits that get filled at market, and this market number continues to increase 1,000, maybe 1,500, maybe 2,500, right? That's a little excessive, but you get the point. And you get a plethora of large market sellers on the DOM that will appear here as well on the bid and ask profile. And it's going to be a large imbalance, a delta imbalance of large sellers that cannot drop the market, which represents an opportunity for a large market reversal should the buyers take advantage of this, right? And that's what we look for in absorption. Absorption to the upside is the same thing. You got a plethora of offers, right? It happens like this. You got a plethora of bids that come in. These guys are limiting in, and they end up marketing and continuously flooding the book right here. It's the same thing on the offer side, except we're flipping it to the offer side, right? You see multiple limits, get absorbed, market buy. You get stuck longs, you get stuck shorts at the low, and you get the reversal on a rebid or a reoffer. So the whole process of the absorption is that you'll get the reversal only when the market buyers step in and say, you know what, it's time to go. Only when the market sellers come in and say, you know what, it's time to go, and they'll reverse this whole move. It's one thing to get absorption, but it's another thing to start seeing the market buyers or market sellers really solidify that idea, right? Absorption is great, but we have to look for that reversal. This is also what we naturally call stuck shorts, but stuck shorts don't necessarily have to accumulate like this. So absorption can happen at multiple levels, right? A few ticks at a time. I'm not saying like 10 points, but you look at a few ticks of absorption as you see these large limits, these resting orders get filled, get added rotations, and you get that eventual rebid. So that's the explanation, the main breakdown of what absorption is defined. Now, where can we find areas of absorption? In this case, we're looking at the 3950. This is a volume profile area. It's a bottom of a distribution. If you guys are unaware about distribution theory, we have a lot of videos on the volume profile. Just check out our YouTube page. Even better, just go to our website, tradeproacademy.com. You'll find a lot of information there, especially in our courses. But 3950, massive area that got absorbed like crazy a few days back, right? It got absorbed like crazy. And this is what it looks like on the absorption side when we go back into the same area. Here's the massive absorption days back on the 350 area. You can see how many rotations, how much time market spent here, right? It started off at somewhere around like 10-ish, and it lasted about an hour-ish of rotation at this low before it went up. And you'll notice all these blue lines, right? These blue lines are large resting bids that sit limit on the DOM itself. So when these guys get absorbed, and re-added, you can see a plethora of these. Realistically, if they can't break down and they get stuck, that's what's going to represent the upside swing. So again, if you find the level, this is one example of finding the level, right? It already happened once, but you can look at a volume profile. We found the 3950 from a volume profile looking at the distribution. So go check those out where you have massive ledges on distributions. Check out the distribution theory we have on YouTube and our own website. But what I want to show you guys is the breakdown of the DOM, how to read this DOM in terms of absorption. So why don't we jump right into this replay and get this going? So we started a little earlier here. You guys can see that we're still trading well above the 50 area. You're getting some resting bids that are sitting at the 55s. You got a decent reoffer that's attempting to go here. You're seeing larger sell side in this middle column here on the sell side. You can see what the reoffer looks like. You have multiple hundreds, higher hundreds, and they sell. They add more hundreds, they sell. The point is, if the downside is going to hold, when you get large orders like this, like 700s, 300, 400, the market has to downtick, meaning that you get a big market sell, it should go down. Like the immediate reaction should be to the downside. Otherwise, you're getting some fishy maneuvering and some fishy order flow there that might represent not so strong of a short. So what we're looking at here, again, you see 240 goes down tick, right? 390 goes down tick, boom, big shorts coming in. We're absorbing and eating up all of these bids that are turning into market sell, 600, 400 down ticks, right? This is what big sellers are naturally supposed to do. So let's see, right? You got some big sellers. They're holding the downside right now. You're starting to see they're kind of getting a little funky right now, right? You got 900. They're trying to sell. 900 goes down. 1,000 goes down. 405 goes down. A little jolt there on big sellers. So this is an area that you want to be watching as well. And let's see how we shape up here. More big sell side, more big sell side. And of course, the area we're interested in is 50, because 50 is where the absorption happened last time. 50 is where the massive rejection happened last time. It wasn't at 52. It wasn't at 53. If you got long 53, for example, you get stopped out at 50. That's the move that you wanted, right? They're starting to get trapped here a little, right? There's some sellers that are accumulating at the lows, and they're not having the best of times dropping into that 50. And look at this. Look at all these big boy bids waiting, massive resting paper. This shouldn't really mean too much for us until it trades. So it's big resting paper. It's an area where you're expecting to see some of these guys hold out realistically, right? If there's massive stuck shorts, because these guys go market short at this area, you're seeing big orders filling, 500s down ticking. If they continue like this, you break this area, you're going to get a very strong flush to the downside. And that's totally fine. You can possibly get that. But this is an area where we start looking at absorption. 51s go, right? And this is the start of it. 51s here, you can see 780 traded sell side on that tick, and it upticked here. This is the cumulative contract sizing that trades at the bid and ask on the profile. It's a volume profile that's split between bid and ask, and you can see what the imbalances are here, where you can see 53, there's a lot of sellers here, but they're still holding below it, so it's some decent sell side. Around 51, however, you saw larger sellers come in and a rebid. You can see 675. That's what I was talking about. 675 buy side comes in, this guy pops it up by like 2 points. That's some sturdy buying. So even 51s, right? It's not the worst of ideas to try to pick up along there because of the reaction as to what had happened. But we're waiting to see what real absorption really looks like here. So they started absorbing a little higher up, right? Because look, 51s, what happens now? They added more contract size on the limit side. 50s, they added more contract size on the limit side. They haven't traded this yet, but watch this guy, right? They trade 336 goes uptick at 51, right? They added 300 and something there recently. They traded all of them at market. That's absorption right there. And it upticked. It upticked aggressively, right? So in this point, as a fader, you'd be looking for something like this because of the absorption that had happened, right? Look at that 51. They're still trading 300s into that area, right? 400 now. 400s at 5 levels, 500s uptick on that. They keep throwing limits in. They're going market sell. They're upticking on a decent bit of 800 and whatever. Maybe we don't even fill. I think this 50 fills. This is a replay, by the way. But this is what you'd want to be looking at. And these are the areas you want to be trading based on this kind of strategy, right? They're getting super stuck at this low. Look at that. 500 at 2 levels. Upticks on a couple of hundred buy side. They keep throwing orders in at this area, right? 53 quarters, 500 are selling. They uptick right now. They add more. They keep throwing more at them. 700 trade there, right? They trade about 200 of the 50s. They uptick 900 now. Buy side try 900, 1,000. They just keep pumping orders in, pumping orders in. Market's not going anywhere, right? You got 1,300 and 850 sell side a tick below. You should be dropping. That is a huge market sell. 1,258 trade. 1,300 trade. It upticks on 600 by this level. This is for me a no-brainer absorption fade where markets are probably going to go up. You have massive shorts at the lows. That's the area. That's the region where you want to see this uptick move, right? They threw a bunch of size at this. They got stuck to the short side. They couldn't go. Now, if you start leaping above 55s where you have this volume profile dip, realistically, you're going to run higher above 58s. I think it's go time. So let's watch this play out. And here comes the bid. 500s, 300s. They're upticking still. I think this trade is done like dinner. We're gonna get this move to the upside. This is one of them. This is one of the moves that we caught and broke down in our trading room. So you guys should really check that out. We read order flow for you guys on a daily basis and comment on that, break it down, educate, and help traders really see the market for what it is, right? It's two main concepts that I've been preaching for a very long time: volume profile and order flow. Again, 7-day money back, I'm guaranteed. Just come check it out. It'll be worth it. You'll learn a lot of stuff. If it's not for you, it's not for you. And I just ask that you give it a shot, because this is how a lot of successful traders actually trade, using just two principles. You have to learn the DOM. This is the principle of order flow, and I'm showing you guys exactly how to do this on YouTube. So really study this video. This is crazy absorption. There's no need to move this, because look at that 520 sell side go. You uptick on that. Realistically, the initial target is probably like 56s. Like, you could squeeze 5 to 6 points out of this minimum. And look, they're just adding on the bid side here. They're adding limits on this bid. These guys are either spoofing or they're just wanting to get absorbed some more. And look, the rebid's happening right now. They're getting larger buy contracts coming in. They're upticking. They're holding out really well. Here comes the move. Let me skip a bit of this. This is a pullback here after we took one off. I'm just skipping a bunch of this right now. We're just fast forwarding a little. You can see them absorb, blah, blah, blah. You should be holding at the 50s realistically. And there we go. And that was it, right? We can just trail this, do whatever it is. Like if you want a video on risk management and more on that, just let me know, please. We'll drop trailing videos, we'll drop risk management videos when it comes to futures. But this is the key to absorption. This is how I wanted to play out absorption. If you want to know where we got the main levels from, you can go check out those volume profile videos or drop a comment down below if you're interested in that. But this absorption is entirety. We broke down what absorption is, the definition. We gave you an example based on the futures, right? What it looks like, how you should interact with absorption, what it really takes for absorption to turn around. So if you enjoyed this video, there is much, much more of this in Reading the Dom at TRADEPRO Academy. Look at that crazy move. It's up like 16 points right now, something that we caught in our live room. So if you want to see stuff like that and help you read the Dom, read it with you on a daily basis, guide these trades, come over at TRADEPRO Academy. We'll teach you how to do this. We'll guide you through this. And we'll talk everything about order flow and volume profiles. So I hope you guys enjoyed this video. Drop a comment, hit that like, hit that subscribe button. Check us out at community.tradeproacademy.com. Check out our new order flow course as well. So I'll see you guys there. Thank you so much for watching. Until next time.